Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are going to be doing a dive into SMCI. It has had quite a major correction, down about 20% since the earnings last night. I'll be doing a technical chart analysis plus some fundamental analysis as well within this video. So let's go straight into it. We're looking at the chart right now, and the good news is, straight off the bat, where it fell to was a major level of support at 46 cents. That is the level $46. That's the level we fell to overnight in pre-market and after hours trading, and that's a strong level of support. Are we going to hold? Well, I'll come back to this chart very shortly, but what I want to do is give you some fundamental analysis as well and go straight back into that chart. Martyn is also doing a fundamental analysis, a full dive into it, but I'll give you some of the key points so you know the context around all of this. So, SMCI. What happened? Well, yesterday there was the earnings, and remember, this is all from our very own newsletter. I'll give you the link to that. It's the first link in the description if you want to know the 5 things you need to know every single day, plus the deep dives, the charts, everything is always in our newsletter every single day. Anyway, Supermicro Computer is a leading provider of high-performance, energy-efficient server solutions designed for AI. It's built quite a nice position within this market. The company focus has become one of the most visible beneficiaries of the AI boom thanks to its focus on direct liquid cooling. We know why it's great. I'm going to jump over to what happened in the earnings. Well, they missed on earnings. Not a massive miss. The revenue came in at 5.76 billion, missing 5.88 billion estimate. Non-GAAP EPS of 4.41 cents fell short of the 44 cents consensus. Gross margin slipped 9.5% down from 9.6 in Q3. So not brilliant, but not awful. For FW25, the company posted 22 billion in revenue, up over 47% year on year, but net income declined to 1 billion from 1.15 billion. Moving on to sort of the valuation and price targets, analyst sentiment has cooled, and we'll come onto the chart and where I think it'll bounce, all that sort of stuff in a second. The analyst sentiment has cooled. The average Wall Street target is $42, about 25% below current values of SMCI, which I would need to change because I think that's incorrect. Anyway, the price tag is $42. Currently, we are sat about $48. Targets range from $15 to $70, with most clustered between $35 and $50. That's sort of exactly where we are, between $35 and $50. So there's not massive targets of 100, and there's not much lower targets either. We're sort of where the analysts are targeting. Recent actions include Webush maintaining a hold with a $30 target, JP Morgan upgrading the hold with a $46 target, Bank of America initiating a sell at $35. SMCI now trades with a forward PE of 18.6x, above the peer average, while trailing PE of 29.5, roughly 65% higher than its historical norm. There's lots of information in this newsletter. Martyn's going to be covering the full analysis of it. I'm just giving you sort of an idea of what's going on. The bull case is that SMCI is still a top-tier AI infrastructure play. The bear case is competitive pressures, margin erosion, and lower guidance points to a maturing growth story. The valuation premium may not hold if growth normalizes and rivals keep gaining ground. The fair value range is about 35 to 50, implying a limited upside from here. We are currently at 48, and that if the higher end of the fair value is $50, the analysts aren't predicting a big increase. So the 12-month outlook seems to be a hold. SMCI retains strong AI credentials, but near-term headwinds make patience the better part of valor. The 16% post-earnings drop reflects justified concern over whether SMCI can defend its moat in a more competitive market. So that's the fundamental. Now onto the chart. remember, there's these targets, $30 to $50 or $30 to $60. We're sort of in that range right now after this correction of $50. Does that mean you can't go to higher than these targets or lower than these targets? No, you see a lot of volatility within stocks like this. So my target is, on the bullish side of things, a $73 target, especially if we hold this $48 range. I think this $46, $47 support is going to be a strong level of support. And remember, nothing I say is financial advice. This is my thoughts and opinions only, so please do not buy or sell based on anything I say. This is my thoughts and opinions, so please don't make decisions based on what I'm saying. I'm not a financial advisor. Anyway, this $47 level I think is strong support. I think we'll see a bounce, and we are starting to see a bounce in pre-market trading. However, does that mean it will hold forever? No, it could break, and if it does break, I'll be looking at $40 and eventually the biggest level of support around the $30 mark. I think $30 will be a very strong level of support if we do break below it, below $47. But my strategy is I would buy at this first level of support, which is $47, and I would buy more at $31, and I'll buy more at $22. These are sort of my targets on the downside. And then where would I be selling? Well, depending where my average is, and if we come all the way down here, potentially I'll be selling back at $47 if we come all the way down to $30. But if we hold $46, where would I be looking to sell? I would personally be looking at a Fibonacci retracement from this level to this low if this holds, and be looking at $55 to $60, and then eventually $73 as the three levels I would ladder out. I have a laddering out strategy, meaning I will buy at levels of support, for example here, and then I'll ladder out on the way up, and I'll be laddering out around $55, $60, and around $70. Can it go lower? Yes. If it does go lower, then I'll be buying more. Again, I ladder in, so I buy a significant amount at $47, maybe 50% of the money I want to put into this, then another 50% potentially between $22 and $31, splitting it up between $31 and $22, because I don't think it will go much lower than that. No targets are that low, below $22. So if it goes down there, I think it'll be severely oversold. But there's no evidence it will go that low, and this level is pure support. If you look back in the past, you can see it was support back in January of 2024, it was resistance back in October of 2024, resistance in December of 2024, resistance in May of 2025, resistance and then support back in June of 2025. So it's a very important level, this $47 level, which is why I think there could be significant support around these levels. There is a full fundamental analysis from Martyn, which I'll leave a link down below in the description to look at all the softwares that we use to see if it is to see what Martyn's software is saying, Martyn's thoughts. He looks at the fundamentals, so I would recommend you go and watch that as well. But the chart, to me, it's at support. We're starting to see evidence of a bounce occurring at $47. Remember, that doesn't mean it can't break below $47. In fact, if it does break below $47, I would consider even buying at $40, $31, $22 as well if we get that low. And then I'll be targeting, if I buy down here, I'll be targeting back at $47. If it holds over here, I'll be targeting $55, $60, and then eventually $70 for SMCI. So I am still fairly bullish on SMCI. I do see the concerns as well with this and how it can go lower, but I don't mind starting to build a position at these levels either to see if we can potentially start targeting in the future, if things grow well for SMCI, back towards these all-time highs around $100, which we saw back in March 2024. But I'm not going to get ahead of myself. I've got targets in place where I'll be looking to buy and sell. But up here, there'll be two videos for SMCI, so do check them out. Please do go and have a look at it, because there'll be levels that you fundamental analysis that you want to see from Martyn. I'll leave the link for the newsletter where you get all the information, and all the information I covered and the chart with all my levels is in that newsletter today, and you can go back and look at all the newsletters if you become a member. But until next time, take care of yourselves and each other. Go back to Martyn's analysis. The link is pinned above. Bye bye.